Good morning, traders. It is 8:01 a.m. Chicago time on Monday, the 15th of September, 2025. This is episode number 2686 of the TraderBite. Thanks for joining me this morning. I hope you had a great weekend. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's take a look at what we have for today here. The pre-market summary sheet from Convergent Trading is showing, once again, a bit of a mixed to slightly risk-on sentiment. We are pushing the all-time highs again, and we're just squeezing through above the 66.60 area. Settlement on Friday was 66.45 in the S&P, and you can see we're up 21 points. In the S&P, we're up 26 basis points. In the NASDAQ, 36 basis points. In the Dow, in the Russell, 22 basis points in the Dow. The leader today is Eurostoxx 50, which is basically kind of like the S&P 500 of Europe. A great product, by the way. No earnings to speak of today. Because it's the first day of the week, what I like to do is to just look at where the key pieces lie ahead. Today, we're free and clear of any upper tier scheduled releases. Tomorrow, we get unemployment out of Great Britain. We also get the Zoo Economic Sentiment Index out of Germany. That's a big one. The inflation rate out of Canada, retail sales out of the U.S. That's going to be important also tomorrow. And balance trade out of Japan. Wednesday, we have the inflation rate out of Great Britain, expected at 3.8%. That's a key one. Building permits out of the U.S. Housing starts out of the U.S. And then the Bank of Canada rate decision also on Wednesday. And then on Wednesday, of course, we get the Fed interest rate decision. Everybody's anticipating that this would have a cut in it, 50 basis points, 25 basis points, or no change being the lower probability. In fact, we can look at the Fed Watch tool and see what the people are betting on already. I'm still not using prediction markets for this. I'm just using the Fed Watch tool, and here it is. So you could see that the current rate is at 425 to 450 basis points, and there's a 96.4% probability priced into the Fed Fund futures for 400 to 425. That's a 25 basis cut. Any further than that, 375 to 400 is at 3.6%. And staying current is 0%. So what does this mean to us? From a macro perspective, it's important to know what the big players are looking at. What this means to us is that the 25 basis point cut is basically baked in. This is what this rally is mainly about. It's already baked in, and we'll see on Wednesday if they actually do that or if they surprise. Now, if they come in with 0, you will have a pretty strong reaction. If they come in at 50, you'll have a relatively strong reaction to the upside. But most of all, they're expecting 25 basis points. We'll see what happens. Thursday, we get the BOE, the Bank of England's interest rate decision, the inflation rate out of Japan, and the interest rate decision out of Japan. Thursday is also very important. So Wednesday, Thursday are big days. And then Friday, we wrap up with retail sales out of England, out of Great Britain. So that's what's up for the week. As far as news, you can see in front of you, there's been a lot of news flow. Trump is saying that conversations with China went really well, and went very well, and that a deal has been reached on a certain company. I don't know why the secrecy. The comment was that a lot of young people love this site, and they'll be happy to see that it's not going away. There's a deadline for TikTok on September 17th. I don't know why the talking in riddles. It's clearly he's talking about TikTok. This is not about Nvidia. That's out there. U.S. Treasury Secretary Bessent has been releasing some comments about the meeting in Madrid with the Chinese delegation. They're trying to make a deal with China. And then Trump posts that too late, must cut interest rates now and bigger than he had in mind. Housing will soar. President DJT. This is what was on Truth Social, I guess. Just very fragmented. Basant says says tariffs on Chinese imports of Russian oil was mentioned, but not the centerpiece of talks. Remember, this was a big piece. China and India need to stop buying Russian oil, which caused crude to shoot up on Friday. And then finally, Secretary of State Rubio will be in Qatar to discuss what happened with Israel unilaterally attacking Hamas's peace delegation or leadership in Qatar as part of the peace negotiation. That's ruffled some feathers and so on. So there's just a lot of news out there. China said its preliminary probe found that Nvidia violated anti-monopoly law. This is seen as a tactic to get the U.S. to approve Nvidia selling some of its chips in China. Tesla CEO Elon Musk purchased more than 2.5 million Tesla shares, according to a filing. For today, we have ECB's Lagarde at 210, ECB's Ren at the same time, and then President Trump to make an Oval Office announcement at 4, most likely about TikTok. And then 5 p.m., we have South Korean import-export prices. Looking at the S&P was balanced and now breaking out to the upside. The profile on the S&P is looking like pretty active price discovery over the range. The volume is really pretty interesting. The volume I have is 191,000, but remember, it's rollover week. Don't forget that it is rollover week. I'm sure you've seen, and hopefully you've seen, let me pull up a tweet that I made here. These are the rollover adjustments. You can get those from EdgeClear or from Convergent Trading. The rollover adjustments right here. The S&P has a 56.75 point premium in December versus September. Today is the day you should start trading. December, don't wait for the volume to click over or whatever. Unless you're trading tens of thousands of contracts, it does not matter. Roll your charts. The difference is 56.75 points, which means that you have to raise all data from Friday backwards by 56.75 points to avoid a fake gap or a misleading gap. For the NASDAQ, it's huge, 238. It's been that big for a while. The Dow, 335 points. EMD, which is very light volume, is 24 points. And the Russell's 18.3 points. So all of our data has to be adjusted for that. I've adjusted the continuous contracts, and it just occurred to me that I had not adjusted the single contracts. So I need to do that in my platform. But we are trading December now, and I am quoting December. So the volume here for the week until about Wednesday at the end of the day, the volume is going to be tricky. Here's the pace of the roll from the CME, and you could see here we're currently at 27.96 versus the average of 36.03. We're well within the min-max and the roll is progressing as expected. Okay? So that's what we have. Now, let's take a look. I won't spend more time on this. The range is normal. Inventory is 92% long, so inventory is leaning to the long side overnight. Everything else is in line. We're seeing cryptos taking a bit of a hit this morning, but that's about it. Let's dive into this expectation from Friday. So let's pull up the scene here. This is from Friday. A quick review. Friday, we had shot up. I'm not going to repeat what I said in that video, but Friday we shot up and then held the new value that was established on Friday between 65.80 and about 6600. The fact that we were trading throughout the session in that range, and no, I'm not frozen there. This is just Friday. This is Friday's image, still shot. It's actually the YouTube video. And then the overall session overnight tested the weak structure below and then held up against the high. So the expectation on Friday is that we would sit sideways around settlement and then eventually break towards 66.20. Here's what happened on Friday in the S&P. This is still, I'm showing the September contract here. This is the September contract on the trigger chart. You can see on Friday we pulled back in the overnight session, and then later in the day session we traded sideways on top of the settlement, and then we pushed up, and then we actually could not squeeze through and above or hold above 6605. And so we ended up holding and closing relatively strong, and then selling off a little bit. Let me roll my contracts here. So 50, this is 56.75. There it is. Now it's rolled. Let's take a look at the big picture. I know it's hard to talk about Trump. Well, no, Biden got his piece, but Biden was not so. The problem is Biden has had his problems. By the way, I'm an equal opportunity whacker of politicians. I will beat up on politicians because we tend to worship these guys like they're some special people, but they're supposed to be public servants. I won't get into that right now. I just have very strong opinions about politics. I don't subscribe to the team, the blue and the red color, but what you have here is a president that is just very dramatic about everything. You know, it's a TV show when actually lives and people's livelihood is in stake. And I expect the person to speak directly to the people, not to be a president for all the people. So I will continue to criticize. I'll continue to criticize any politician, including Sturmer. That nobody's exempt, but who cares? It's just me. Okay, so here's what we got. So we saw this action here on Friday, and then what we've done so far is we traded right here in the overnight session. You can see we opened basically at prior settle. So the whole time, from the time Friday closed till Sunday's open, no news flow there, nothing new to talk about, and we sat sideways, and then we just started to run up here. This morning we did have, again, a lot of the U.S. The overnight U.S. action happens at the European Open. So the European Open is quite important. You'll notice there's pretty much a reaction every time Europe opens. And that's at 2 o'clock Central, 3 o'clock Eastern. The European markets open. We have a nice little test down into the prior settle. What we created here auction-wise is a really good base for a rally. I mean, essentially, think about it this way. We started running up in the overnight session. Let's expand this a little bit. We started running up and we're one time framing. Remember, this is a 30-minute chart, okay? It's not a small time frame chart. We start to run up and then we test down. So we flush the weak hands and then we have an excess that is put in down here, and then it starts to get back above the VWAP. And to me, this is just a very sustainable short squeeze. If you recall, on Friday, I was looking for a target of 66.20, add 56.75 points for the roll. It gives you this measured move target of 66.69 right over here. So what I thought we would get on Friday, we're kind of starting to walk towards and get, it's actually up here. What I thought we would get on Friday, I expected for us to walk towards here today. So we have this first measured move, which was added last night at 69, and then we have the equivalent of the 66.20 before at 66.78.75 above. So this is likely to be the target for the day. Notice that one vola sigma, the range, the expected elastic band, the normal stretch of range for today, close to close, is actually in that area. So what that tells me is that this, while on Friday, the one vola sigma was below that 66.20 in the September contract, it is now above our target. So it gives us a lot of room to be able, it gives us the statistical probability to be able to get that target today. So that's what I'm looking for. One thing to note, we are opening in a gap into new all-time highs. And if you remember last week, I talked about this when it happened, that when we open in a gap on all-time highs, we tend to respond just like we did here. We tend to respond backwards. So I'm looking for that responsive, especially with the inventories long at 60 whatever or 90 whatever percent. I'm expecting this to respond downwards, and the key stock zone to look out for is the 54 below. Again, this is in the December contract. So if it does pull back, I'm looking for it to find a bounce and then push back up and start to continue to push higher, right? As the market prices in or gets prepared for a cut, and as the probability of a 50 basis point cut increases, there's going to be a lot of pressure, especially especially for trading the Russell, actually more sensitive to interest rate adjustments. We'll look for stronger upside. Okay, I'm not going to be aggressive short at all. Again, the one-time framing on the S&P is to the long side, and unless that gets broken, structurally speaking, auction-wise, that takes us from being out of balance on the buy side to neutral and likely balanced. It doesn't mean that I start to be aggressive on the short side. It just means I need to step back and wait for the market to decide what it wants to do. But I still will get setups intraday for long or short. But a day like today, where we're opening in a gap higher, I need to see what it does to the sell side before I decide to go and sell. What am I looking for? I'm looking for aggressive selling, weak buying in the order flow, and I'm looking for it to move back to where we have balance, which is 66, 48-ish, 49-ish, right in here, this point of control here. Looking for that to come in. So once it gets into the range, we're looking for, because this was a pretty balanced day, we're looking for value high here for a test. And then once the value high is done, the point of control, and then once the point of control is done, we're looking for prior settle on the short side. But really, I'm looking for this thing to push higher. Looking at crude oil, I'll bring this back as well. Let's switch to crude oil. This is where I talked about crude oil in the video. And I talked about this, you know, this news that 100% tariff should come out of Europe against India and China, as long as they keep buying energy from Russia. And so that's supply that's coming off the table, and so prices are likely to push up. And so take a look at how this is pushing up, and then the expectation on Friday, let me switch screens here. The expectation on Fridays, you see, is that it is still bound by these edges of balance. And so the expectation is for it to push back to this consolidation point before the run up, and to pull back in here and to go sideways. So here's what actually happened in crude oil. So I'm just showing you expectation versus what it did. And what did it do? It came back. It went right into that zone where we expect a reaction and sideways. And the reason I do these reviews is not to say, hey, look at me, I got this right. It's to say that everybody can hypothesize about what the market will do, but let's test that against actual. We want transparency. We want to make sure we understand what went right and what went wrong. And you can see that it just stalled out right into this zone, this consolidation zone from which the rally continued. And so that's the expectation. If it had let go of this zone, then we would be looking down here for the next consolidation. Why? I don't have time to get into that right now. We cover that quite a bit in the accelerator program, but essentially think of you're in the pit trading this product and you were long, or you weren't long, and this thing takes off and you're looking for a pullback to get long. Where would you do that? Would you do that here? Would you do it here? Would you do it here? Would you do it here? You would do it on the pullback. And what I was looking for on Friday is it comes back into this 62.80 area for a long. But the problem with that trade is by the time it came back, it had formed a lot of volume above and it was flushing. So the setup never occurred. Remember, the setup is it has to bounce down, consolidate, retest, and then we're long. Not, I'm going to put my bid there and hope for the best. So unfortunately, the 62.80 looked beautiful when we first opened. It would have been nice for it to fall through, form a consolidation down there and start to resolve to the upside, but it never gave us a setup. The strategy was there. The strategy was correct. The plan was correct, but the setup never occurred, so the trade cannot occur. Okay? So we're always asking, just like Brother Love here says, exactly, we're always asking, what has it done? What is it trying to do? How good of a job is it doing in this auction? And then finally, the most important question is, what will it likely do next, given the answers to the prior facts? If you can get your mind to think in this sense, as opposed to following the tick drama or looking at a heat map and just monitoring every tick, if you can just step back and look at things from that perspective, your trades, your hand in a trade would be a lot stronger. Okay? Anyway, I'll leave you with that. Good luck. Don't forget to subscribe to the channel. It's free. If you want to go to the subscription button directly, just go to ft71.com/YouTube, lowercase. Hit the subscribe button, hit the alert button. I'll catch you on Wednesday. Take care.